Welcome to the Deep Dive. Today, we're looking at something from the Trade Sage podcast, episode 4, specifically their idea of the patience principle in trading.
That's right.
And our mission really is to kind of unpack why patience is so critical. More than just advice, but like a real strategy, get some actionable stuff for you.
Yeah, exactly. Because it's easy to get lost in charts and indicators, but this source, it really zeroes in on discipline, the discipline to just wait sometimes.
Strategic waiting, not just sitting there.
Precisely. Recognizing that inaction can actually be the smartest action.
Okay, so when they talk about patience,
Yeah.
what does that look like in, practical trading terms? It's not just drifting off, right?
No, not at all. It's active. It means holding off until your specific trade setup materializes. Those conditions you've defined in your strategy.
The ones that signal a good potential opportunity.
Exactly. And it's also about, well, having the nerve to let your winners actually run. Trusting your analysis without second-guessing every little dip or spike.
So it separates the intentional trader from the impulsive one.
That's a great way to put it, yeah.
Right. But if it's so important, why is it so damn hard? I know I struggle with it sometimes.
Oh, me too. And the podcast suggests our whole modern life kind of works against us here. We expect things instantly, right?
Yeah. Click a button, get a result.
And the market just doesn't work that way. It has its own pace. That clash is tough.
So what are the typical pitfalls? What happens when we get impatient, according to this podcast?
Well, the Trade Sage highlights a few big ones. Simple boredom, for instance. Just sitting there, nothing happening, so you take a trade you shouldn't.
Just to do something.
Right. Then there's the classic FOMO, fear of missing out. You see things moving fast, you jump in without thinking if it fits your rules.
Been there, definitely.
And also doubting yourself too early. Like, you're in a perfectly good trade, it pulls back a bit, and bam, you're out, prematurely.
Oh, that stings. Exiting for a tiny profit, or even a small loss, then watching it go exactly where you thought it would.
That's impatience biting you.
Big time. Okay, ouch. Let's flip it then. What's the payoff? What are the real, tangible upsides to cultivating this patience?
The rewards are actually pretty huge. By waiting for those high probability setups, your entries are just cleaner, stronger.
Makes sense. Less guesswork.
Exactly. Patience acts like a filter. It screens out the junk trades, the noise that doesn't really meet your criteria.
Okay, so better quality trades.
And, crucially, it gives your winning trades room to breathe, to actually grow. This massively helps your risk-reward ratio over time.
Right, letting profits run instead of snatching pennies.
Plus, there's the mental side. A patient approach generally means a calmer mind, less frantic decision-making, more clarity, better choices overall.
Better entries, fewer bad trades, bigger wins potentially, and less stress. Sounds like a win-win-win. So how do we actually do it? How do we build this patience muscle? Any practical tips from the source?
Oh yeah, definitely. One thing they suggest is using price alerts. Set an alert for your target level, then step away. You don't need to stare at the screen constantly.
That avoids the temptation to just click buttons.
Totally. They also mention things like meditation or even simple breath work. Sounds a bit out there, maybe, but it trains discipline, calmness.
Interesting. Like mental conditioning for trading.
Sort of, yeah. And simply reducing your screen time overall. Less exposure to those tiny, meaningless fluctuations that can trigger impulsive reactions.
Get away from the noise.
And finally, keeping a journal. Specifically, tracking moments of impatience. What triggered it? Why did you feel the need to rush? Seeing those patterns helps you break them.
That sounds powerful, recognizing the trigger.
It really is. And always remember their point. The market's not going anywhere. It'll be here tomorrow. But your capital, that can disappear if you're reckless.
Right. The market persists, but our account balance might not if we're constantly jumping the gun. So, boiling it all down, what's the core takeaway here on the patience principle?
I think the main message is that patience isn't just, a nice personality trait for a trader. It's a core skill. It's an actual edge.
A trading superpower, almost.
Yeah, I like that. It's the discipline that lets your carefully planned strategy actually work.
Trusting the process enough to wait for your pitch instead of swinging wildly.
Couldn't have said it better. And it's something you can actively work on, actively develop.
So maybe a final thought for you listening. Think about where else this applies. Beyond the charts, where could consciously applying this kind of strategic patience, the waiting for the right moment, trusting the plan, improve things for you in the long run? Something to chew on.
Definitely worth considering.
Thanks for diving deep with us today.